Good evening, investors. Welcome to this week's market update from CBN Financial, your source for what matters in the markets so you can make informed investment decisions. Let's begin with a snapshot. The SPDR S&P 500 ETF SPY is trading around $654.26, down roughly 2.52% on the day. Major moves ampersand market sentiment. On October 10, 2025, the U.S. equity markets experienced one of their most significant one-day declines since April, largely triggered by renewed tariff threats from President Trump targeting Chinese imports, especially rare earths. The S&P 500 dropped approximately 2.7%, the Dow fell around 1.9%, and the Nasdaq tumbled about 3.5%, with tech and I names hit particularly hard. Investors reacted swiftly, rotating toward safe havens. Yields on the 10-year U.S. Treasury slid to around 4.06% as demand for government debt surged. Gold also rallied, breaking through the $4,000 per ounce mark amid rising geopolitical and inflation fears. While the sell-off was broad, there were pockets of strength. Elastic announced a $500 million share buyback and raised fiscal 2026 revenue guidance, causing its stock to surge nearly 9%. Also, Tractor Supply received a bullish upgrade from Citi, with hopes that its business fundamentals will rebound. At the same time, global and institutional voices are sounding alarms. Goldman Sachs describes the broader rally as fairly high quality, yet also recommends hedging strategies given the macro risks. And notable voices like JPMorgan and Jamie Dimon warn of a 30% chance of a market correction within the next year or two. The Bank of England has similarly cautioned about excessive valuations in AI-driven tech names. Underlying risks ampersand themes to watch. 1. Tariff escalation ampersand US-China tensions. President Trump's renewed threats on rare earth tariffs were the spark this week. Markets remain hypersensitive to headlines, especially when supply chains or critical materials are involved. 2. Valuations bubble or transformative shift. Much of the market's optimism this year has centered on AI and semiconductors. But with warnings from central banks and sharp corrections in some names, questions about sustainability are mounting. 3. Government shutdown ampersand data blackout. The federal government has been shut down since October 1st. This has delayed key economic releases, creating a data vacuum and raising uncertainty around policy moves. 4. Bond yields, inflation, and rate outlook. Falling bond yields and rising gold suggest a flight to safety. The big question is if the Fed can pivot to cuts without stoking inflation or undermining market confidence. What you should consider doing: protect your downside. Hedging strategies such as index puts or tail risk protection may be appropriate in this environment of volatility and geopolitical uncertainty. Be selective in tech ampersand I exposure. Rather than broad bets, favor companies with strong balance sheets, real revenues from I, and defensible moats. Diversify globally. With rising questions about U.S. dominance, exposure to international equities and emerging markets can help. Watch catalysts carefully. Tariff news, Fed commentary, trade talks, and earnings surprises will likely drive near-term moves. Stay prepared to act. Volatility events often offer entry points for high-conviction names if valuations reset sharply. Thank you for joining today's market update, brought to you by CBN Financial. Until next time, stay informed, stay disciplined, and invest wisely.